Welcome back to Starting from Basic. Remember, it doesn't matter where you're starting, only that you start. In today's video, we talk about my 3 biggest mistakes when I began investing. Let's jump into it. First of all, this isn't investment advice. This is just going off of my own experience, so be sure to do your own research in making your own decisions while investing. So next thing to note, I am a beginner investor. I'm not a super wealthy person, but I have managed to grow my stock portfolio from $0 to about $32,000 in a year. And I'll show my earnings up on the screen here. So stock portfolio's up on the screen there. As you can see, 99% of my stock is in Tesla. I'm not some guru investor, but I think I just had the right level of conviction in Tesla at the right time. So let's jump into those 3 mistakes that I made when I started investing. So my first biggest mistake is having low conviction into what I was investing in. Having conviction in something means that you're really committed to it and you're willing to take it for that long term. So see investing the way I see it, like a marriage. You wouldn't be married to somebody that you have no conviction with, right? You are making a long-term commitment with these companies that you're investing in. My first companies that I invested in were Apple, Amazon, a bunch of index funds, and actually Tesla. I actually sold my 3 Tesla stocks. And this was back when they were like $160 a share pre-split. So I would have made so much money off of those stocks. But I sold them all because I had no conviction to Tesla. I had no idea what their leadership was. I didn't know what their vision was or really what they were doing. Same thing with Apple and Amazon. And since I had no conviction with these companies, I wasn't committed to the companies, I wasn't committed to their vision, I ended up selling most of these stocks after like 6 months, and then I just stopped investing for like a year. So I would say when you invest, make sure that you have some conviction in the companies that you're invested into. Do your market research, look at what their leadership's like, and see if they're a company that you really believe in. So for the long term, you can hold on to those stocks and invest in that long-term value, just like a marriage, right? Long-term marriage, long-term relationships.
I love you.
I love you.
So my second biggest mistake is trying to time the market instead of having time in the market. When my stock started to decline 2 years ago, when I first started investing, I knew nothing about investing. I put $1,000 into a few companies, and that money dropped down like $50, $100, and I literally just sold them all. I got so scared that I was gonna lose money and I was coming into the market at the wrong time that I just freaked out and sold them. And my 3 Tesla stocks that I had at like $160 a share would have been worth a small little fortune in my terms of money right now, but I did end up selling them all. And this was unfortunate for me because I was just that person trying to time the market. I was looking for that short-term gain, trying to come in at the right time, and it ended up costing me a lot of money. So remember that nobody can predict the market, and it's better to have time in the market rather than trying to time the market.
I don't know when to buy stocks, but I know whether to buy stocks. Making a terrible mistake if you stay out of a game that you think is going to be very good over time because you think you can pick a better time to enter it.
My last biggest mistake is not being a consistent investor. Not dollar cost averaging and not really budgeting my investments. All those things kind of go hand in hand. For me, I saw investments as a one-time thing that you do every now and then. I wouldn't do investing before spending, and I also thought about investing after I put away savings. Now, firstly, I want to address that when I really started taking investing seriously, I made sure that all of my debt was paid off, and I made sure that I had a small emergency fund for savings in case of a rainy day. Now, after that, I became very strict about my investing, like totally strict. I invest immediately after all of my bills are paid, and I budget a small sum of my money to invest every single month. Now, let's get into dollar cost averaging. So what does dollar cost averaging mean? It just means that the money that you want to invest, instead of putting it in a huge lump sum at one time, you're investing in a consistent way over time to decrease that volatility aspect of the market. Now, I do dollar cost averaging because I set aside a little bit of money after each of my paychecks and I put it away, and I'm just very consistent no matter what the market does. So rather, if my large sum of Tesla stock's going up, I invest. Imagine if my stocks dropped and went down, I'm still gonna invest. I don't care what the stock does because I'm in terms of all of my stocks for a long-term period of time. So dollar cost averaging is just making sure that you keep investing in consistent amounts over a long period of time. Now, getting into budgeting for your investments and for consistency, remember that be in the mindset that you need to pay yourself. Now, I'd rather put my money in the stock market now that I have some money saved up for a rainy day, because when you put your money away in the bank, your money is literally losing value over time. Quite literally, your $100 in the bank is becoming less valuable every single day due to inflation. So, would you rather put your money in the bank where it's losing value because of inflation, or would you rather be putting your money in the stock market in a company that you have high conviction in and you believe in and that will maybe accelerate over the next 5 to 10 years? And that's the way that I feel about most of my stocks. So predominantly Tesla, I feel like they're going to really accelerate change in the next 5 to 10 years. I have a high conviction and I believe in them, and I don't care what they do over the short term. But I know that it's better than putting my money inside of a bank where it will lose value versus in the stock market where I have a conviction and believe that those companies will gain massive value.
I'm so pleased you find it to your liking, Goku. Are you fully prepared to break it in now?
Yeah, let's do this!
That's it. Those are the 3 big mistakes that I made when I was a beginner investor. Remember, those are having low conviction in the companies that you invest in, trying to time the market instead of having time in the market, and then not dollar cost averaging or budgeting for your investments and making sure that you have a plan when you're investing. I've got to ask you, do you have any big investment mistakes that you made when you started your investment journey? Please leave them in the comments down below. Please be sure to like and subscribe if you want more of this content. And remember, it doesn't matter where you're starting, only that you start. See you later.